Good morning, team. Happy Saturday. I'm making this video one for just to give you more of a longer weekend video to kind of study and go through. I have a whole bunch of stocks today I want to go over that I'm setting up for this week, and then some little minor lessons on what to look for in the charts for the weekend study. I put a nice little note on the email I sent out. Basically, the gist of it is, put the work in to control your own destiny. Just the harder you work, the luckier you get. The harder you work, the more you study, the more you learn from your mistakes, and you adhere to your rules and your disciplines, the more profitable you're going to be. That's just simple. Okay, just keep at it. Okay. The Nasdaq, the Qs, we had that classic H pattern. Here we go. And then when I told you when it would break the neckline from the previous one, we were going to go lower, and here it is. And then what happens with an H pattern is once you have that break, it shakes all the buyers out, and then you have that thrust of reversal. Especially down here, we were at a market timing of like single digits. So it was kind of like a perfect storm for this like boof up here. Again, we still need to clear the 21. It's down sloping, and the 50 is down sloping, very close to, getting that death cross if we don't kind of stabilize and kind of, keep going up as the market goes up. So, and clear that up a little bit. So I'm looking at potentially Monday being also an up day just because of probabilities. Again, everything I do is based on an edge. I don't guess. I don't assume. I don't listen to anybody's opinion. I'm market data driven. The numbers and the price action tell me what I need to know. I don't care what happens as far as financial news or anything like that. All that's going to be reflected in the price. So cut the noise out, cut the distractions out, and just look at the price. If the price does this, it's good. If it does that, it's bad. That's simple. And if it breaks a particular support and it goes down, you get out. And if it breaks a resistance and it goes up, you get in. Simple as that. And then if it comes back in below the line, you get out. That's simple. It just keep things very, very simple in your trading. Don't get complicated. So, again, I'm looking for Monday to be a continuation of this. I don't know how much more we're gonna go. I doubt it's gonna do this, but we still gotta clear this little shelf right here, which is again clearing the 21. I still have this down primary trend line that we need to clear, so we should see it within the next couple of days here, and then maybe reverse back and go sideways for a little bit, and then continue higher. I don't know. We'll see. But again, I have a strong, feeling based on what I'm looking at here that this might be a low, that we might not see this low again for a while, if at all, just because of the pattern. Again, I have no idea. We could do this and then boom, boom, boom. I don't know. But again, we'll see. Obviously, if we break this again, then we're going to retest. So we'll look at day by day, but we kind of like just kind of looking at what the numbers are telling us. This is what I'm looking at on the market. Let's go over some stocks. I have quite a bit of stocks of numbers and setups. So again, these are all going to be good to cancel, basically price targets. So they might not necessarily hit all on Monday or Tuesday or Wednesday, but put your alerts in, put your price targets in, and then throughout the week, throughout the days, if they hit, then that was your trigger. Look at it, see if there's volume supporting the price action, and then you put the trade on. Okay, it's just that simple. All right, so let's get started. The first one, let's go with COP. COP, I'm looking at 95.03. 95.03. I have my trend lines already set, so once I'll get the alert once it clears that. But I want to take off this high. I want to take off this little shelf right here. If you notice, this kind of same scenario here. It might do this. It might do this, and then eventually sometime in the future do that. then that's when you buy. Look at here. Let's say, you know, we would have put a price target in, once it did this little shelf right here at 70, you know, 78. It never hit it. It kind of came back, but it never hit it. So you waited. You waited from October 22nd through January, you know, 3rd or 4th or 5th. But that's fine. That's all this time you avoided this drama. You waited, you had your price target alert, and you get in right here at 80, and you took this puppy back, you know, up to like 85 or something like that. So that's how you trade these things. Look, same thing back here. You know, back on July, you would have put this alert on, and it never triggered until like September, you know, 15th or so. So you would have gotten in at, let's say, 64, and you could have probably taken in, maybe you got to stop that right here. You probably would have taken in to like, what, 70, 75 around there. That's a nice, you know, 15 point, 10 point move, in what, 15 to 20 seconds, about a month. So again, that's you know, same thing here. Let's say you would have taken this, you know, 61, 16 around here, and you would have gotten stopped out. So this didn't work. What, you lost like a percent and a half to maybe making here 10, 15%, you know, 8, 9, 10%. And then, you know, once it sets up again, you get in right here, boom, you got stopped out. You lost another 2%, 3%. That's fine. But then again, you lose 1, 2%, you make 8, you make 15. That's trading, okay? So, COP, we covered that. CPG. The next one is CPG. CPG, I'm looking at 687. 687. I want to take off this high right here. A nice little shelf right here forming. We take off this high, we could take off. My stop will probably be somewhere below the 50-day moving average. Okay? Look at the same concept. We would have taken it at, you know, 651 around there. We would have taken it right here. We would have taken it all the way to, like, you know, let's say 650. We would have gotten stopped out once it broke in here. So, nice little move. CPG, 687. ERF, 1267. 1267 ERF. I want to take out this high right here. If it takes that, it could take off. My stop below this little shelf, which again coincides with the 50. Guys, anything below the 50, you get out. Simple as that. Here, breaks the 50, you get out. Just that simple. Once it comes back above the 50, you have this little shelf right here. What happens? You print money. You print money. Okay? That's how you trade. You don't try to force the action. You let the action come to you. If you see something happen, you take action. Don't anticipate. Don't look for things. I mean, perfect example. I mean, look at a great company, Upstart, right? You know, once it became IPO right here, down in, you know, in the 80s, this sucker went from 80 to 400. Awesome. Look at how many times they let you get in. Basically, just a one time. I mean, you know, here at 165, you might have gotten in, but you would have gotten stopped out. Maybe here at 105, you would have gotten in, and when taking it to 65, you get in at 192 right here, you take this to 300, and then you probably get a guy now around right here. Again, 346, 347, you get in, you take it to 400, within days, you're back in and you're out. What happens here? You put another little shelf here back at 346, it never hit. You never got in. What happens when it breaks the 50? This has never seen an uptrend again. Never. Great company. Great company. Zoom, right? Everybody uses Zoom. Extremely profitable. Extremely profitable. Look at these numbers, right? Zoom, I mean, Zoom, just like, you know, back in the 400 range. What happens when it breaks the 50? It has never seen an uptrend again. Look at this. This has never seen an uptrend again. You're looking at 400 to like 130. Come on. It's very simple. If it breaks the 50, get out. Just that simple. I can give you, you know, a gazillion examples. I mean, Fastly. I mean, if you can't even see it, let's look at the weekly. I mean, let's say you're taking this base breakout here. Okay, you're taking it at what, a 40? You go to 40 to like 100 almost. I mean, that's 120% return. Great, but then look how choppy it is. Once you get stopped out, once it breaks to 50, it has never seen an uptrend again. It went from 120 to now what, $18 stock? If it breaks to 50, you get out. I want to repeat it. If it breaks to 50, you get out. If it breaks to 50, you get out. I cannot say it enough. It is so simple and it's so hard to do, but it's just so simple. If you have a stock, you can love it. Look at NVIDIA. I love NVIDIA, right? I love NVIDIA. I mean, look at the daily. I love NVIDIA. Look at this breakout right here. 230. You buy it right here at 235, 237, 40 around there. You go from 230 all the way to 300. I mean, wow, right? Then I definitely probably would have gotten stopped out, in this little thing here. I would have taken profits. I definitely would have gotten stopped out somewhere around here at 300. So I would have easily made 70 points here. That's great. I did not take this trade. I took it from back here. I had NVIDIA from back here in the 160, 170, and I took it to 200, and I got out of 200 once it broke this, and I never got back in here. I just been selling puts on it along the way. But look what happened to NVIDIA. Great. I mean, look at the numbers, right? NVIDIA, it's in everything. Semiconductors, artificial intelligence, in everything, right? What happens when it breaks to 50? Right here. What happens when it breaks to 50? Right there, this day. You get out this day. What are you looking at here? 290? You get out at 290, right? What is it at right now? 241. And it hit as low as 200. You would have saved all this drama. Okay? Whenever a stock breaks to 50, you get out. Even here, I mean, I probably would have held it. Like if I would have seen like a next day lower, I would have gotten out right here. But definitely that next day, I would have gotten out. Now for NVIDIA, I'm looking at the 270 range. It's got to clear 270 or this down sloping trend line for it to kind of continue again, build a base. It's got to come all the way around, build a base, consolidate, maybe a little handle, and then take off. Okay, so I have multiple price alerts on NVIDIA. Again, H pattern, right? What happens here? It broke it down. The next day, boom. So typical H pattern. So just breaks to 50, get out. If it breaks to 200, even more, get out. I mean, look at PayPal. PayPal's in everything, right? Great freaking company. I mean, it's PayPal. Who doesn't know or use PayPal, right? What happens when it breaks to 50? Right here, right? Kind of stayed above it, stayed below it. It tried to recoup it. It broke it again here. It has never again seen an uptrend. You're looking at 300 to 100. That's a 200-point downturn. Yeah, and you had the death cross right here. The 50 going below the 200. And then what happens again? It just keeps falling. So it doesn't matter how good the company is. Don't fall in love with the company. Fall in love with the chart. You want a chart that does this. You don't want a chart that does this. You want to go from lower left to upper right. You don't want to go from upper right to lower left. Okay? Lower left to upper right. Just look for charts that go from lower left to upper right. If you see a chart going from upper left to lower right, that's not a stock you want to be in. And again, just look at the chart. Just follow the simple moving averages. If it breaks to 50, you get out. If it breaks to 200, even more. Okay, I digress. Let me continue with my stocks. Oxy. I just want to, I repeated myself a million times on the same thing because it is like something so simple that if you just do that one thing, my God, you could save so much money. And by saving money, when you do make a little, your account will grow. And that's the whole point of trading, having the confidence to know that you will make money in this business. By not losing a lot of money, you will make money, because there will be trends. There will be trends where you could print money. You know, there will be moments where you could make a lot of money, as long as you don't give it back. When do you give it back? When you have this downtrend lines and you continue to own the stock, thinking it'll come back, it'll come back, it'll come back, it'll come back. Maybe it will, maybe it will. But why do you want to be in a stock for 9 months, 10 months, waiting for it to come back, and have all that stress and drama? Simple, simple. Breaks to 50, get out. I'm extremely digressing here on the same point, but I just want to get it across because it's something so simple that I have made that mistakes. I'm not saying I'm not fallible, but you learn from it. You learn from it, and then that's how you become consistently profitable. Okay, the next one, Oxy. Oxy, you're $40. I want Oxy to break this little shelf right here, this downtrend line. Oxy, $40. The next one, MTDR. MTDR. I'm looking at MTDR 4903. MTDR 4903. I want to take out this high here and break a 49 price range and go higher. This could happen whenever. It doesn't matter. It could be next week, next month. But I need to see this kind of price action resolve itself before I take action here. Like back here, you know. Think of this 48.78. Let me clean this. I mean, look at the weekly is pretty tight too. Look at this. I like this. I like this weekly. I like the action. Think of this 48.78 right here as back here this 38.05. See how kind of how it peaked up and then it kind of went down, kind of peaked up and it went down. So if you break this 38.05, you waited for all this drama. This nice little cup here. You avoid all this crap. You don't try to anticipate it. You avoid. So once it breaks it out here, let's say you bought it at 39, you went from 39 to 47 in what? October 24th to September 20th. So in a month. In a month, you almost made 7 or 8 point move on a $38 stock. That's great. I mean, you're looking at what? 18% return in a month. 18% return in 1 month, just because you were patient and you had a rule that you will buy when it breaks out and then you would just follow it along. I mean, trading is so simple, guys. MTDR 4903. Okay. CVE. Is it CVE? Yes, CVE. CVE 1543. 1543. I want to take off these highs right here. I have my trend line here. If it breaks it, I'm in. CVE 1543. My stop is going to be probably below this low here. I won't even let it go down even further because that's the whole point and a half on a $15 stock. It's too much. So it's consolidating. Same concept. 1348, right? Back here, 1348. Once it broke it right here, you went from 1350 to 1530. Again, that's, I mean, $1.75 divided by 13.50. You're looking at a 13% return. 13% return from Jan 1 to in 2 weeks. That's 26% return in a month. That's how you trade. Look at here. 1055, right? 1055. You took it all the way to 13 something. That's how you trade, okay? So don't try to buy here. Again, once it breaks to 50, you just, and then once it came back up to 50, you could even have an early, this is what's called an early cheat entry right here, if you don't want to wait for up here. But it's just simple. Once it consolidates, you don't want to buy, you don't want to try to bottom fish it. You want to buy high. You want to buy high when it breaks high and then sell higher. You don't want to buy low and sell high because you don't know how low is. You want to buy high and sell higher. CVE. FMC. I'm looking at FMC 120.65. 120.65. I want to break this little shelf right here. Okay, once it breaks that little top handle here, because 120.25 right here, and then this 122 here, it's just so far back that it really isn't relevant anymore. Once you have a lot of time pass, like this previous highs, like 3, 7, 5, 6 months before, then these are not as relevant as like near points. So even here, once it broke 115, you went from 115 to 120. Let's say you would have gone right here 117, 118. You still make 4 points. That's 4% move in what, 2 days? So again, it's a whippy stock, but you want to see it prove itself. Okay. SQM. I'm looking at 6803. 6803. I want to break this high right here. Okay. Once we break this little shelf here, actually I like this. This is a nice little cup. Okay. And this should be the handle. Once we break this, we should take off. Okay. So again, this is wild. This is like wide movements, right? So 6803. So let's say you buy it at 6803. So Alex, where do I put my stop? I'm putting my stop right here. If it breaks this high, so somewhere what 65 around there, 63 and a half. I mean 67 and a half around there. I'll tell you right now. What's the high? High is 64.43. So 64.39. So a 4-point move. So you will buy, maybe like instead of 100 shares, you might buy 75 shares or something like that. So that's SQM. HAL, H-A-L. I'm looking at HAL of 37.75. 37.75. I want to take off this little high right here. Sorry, this little high right. 37. It's not 37. What I want to do here. Sorry, 32.75. 32.75. I want to take off this little high right here. 32.75. HAL 32.75. If you want to take out this little high right here, okay? Nice little cup here, little base, and it took off. Right. Let me see. What's the next one? ABC. ABC. I'm looking at 142. ABC 142. I want to take off this little shelf right here. This downtrend sloping down sloping trend line. Once it breaks that, it should take off. Just like this day right here, where it kind of took it off right here, and we took off right here. Took off. Okay. Right here, took off. These right here. This right here didn't. This one little peak right here didn't work. So you would have gotten stopped out, and then this right here, you took it from 127 to 129, and once you came back into the line, you got stopped out for a break even, and then you waited, and then you would have gotten in right here, and then maybe here again, and maybe here again. You get the point. Zim 71. Zim 71. Take off this high right here. Zim 71. I like the numbers. Look at this growth. Look at this growth rate. Look at this. Great company. But you want it to prove itself, okay? I had this trend line here. Once it broke 59, I got in right here. I took it to like, I think 62, and then I got stopped out for like a scratch. Basically, it didn't work. That's trading. It doesn't have to work every time. This one worked. You take it at 45, 46, and you take it to 48, and you take it to 58. Let's say you got stopped out at, let's say here at 57, 58, 55. It's still a 10-point move. You try it again, didn't work. You don't lose any money. It's basically a scratch. You're gonna try it again here in this little shelf right here. You would have picked it up here at 62, 63. You would have taken it to like in the 70s. Now I'm trying to wait for it again. It might devalue. It might kind of dip around until it comes back again. Okay, Zim. JNPR. 3510. 3510. I want this to break this little shelf right here and take off. JNPR 3510. DAC 95. 95. I I want this is going to be a 100 play. So if he breaks 95, I'm in. You can go to 100, and like I've said before, from 100 you can go to like the 110, 112 range before it comes back. So we have a nice little 10% move here potential if we break this this little shelf right here. Okay, you were taking this one at 89.41, so let's say 89.50. You would have taken it right here. You would have taken it from 89.50 all the way to 100. Okay, that's a nice trade. Here from 80, you were taking it from 80 to 89. Okay, here 69 to 79. Here 58 to 68. This one 35 to 57. Let's say you were taking it 57. You probably would have gotten stopped out here somewhere. Okay, so like let's say 40. Still 6 points. Okay, that's trading. GNK. I'm looking at 2105. 2105. I want to break this little shelf right here from the one this base to kind of form, maybe form a little handle here, and then take off. Okay, good numbers, really good numbers. Okay, look at this, from negative to humongously positive growth. Okay, top 15 industry group. GNK 2105. Next one, CMRE. CMRE. I'm looking at 1507. Okay, I want to take out this little high right, this little shelf right here. 1507. Okay, again, these back here, since it's back in September, these highs are not as relevant as closer highs. So, you know, even back here, this little low cheat area, if it would have broken this 1340, you would have taken it to 1340, you probably would have been chopped around, you probably would have gotten stopped out. That's why sometimes low bases from this high here don't work as well as a true base when you kind of start breaking out of, you know, to new highs. Okay, look at this one over here. Let's say you would have taken it at 1271, 1272, you would have taken it to 16. That's a 4-point move on a $12 stock. That's like almost 25% return, and that happened in how long? You know, let's say August 20th to September 10th, in less than a month. I mean, that's huge. Okay, so that's what we look for. That's what we look for here. Okay, TRGP. TRGP. I'm looking at 64.35. 64.35. I want to break this little shelf right here. Same concept, guys. Same thing. I'm just trading is so simple. Look for a base. It breaks the base, you get in. Look for a base right here. It breaks the base, you get in. Look for a base. It breaks the base right here, you get in. I'm looking for a base. If it breaks this base, I get in. It's just that simple. Okay? TRGP 64.35. And the last one of price targets, the price alerts, HSY. Good old Hershey. I'm looking at 205.10. 205.10. I want to break this downtrend line. I want to break Friday's high, and take it up. If you look at the same kind of shelves from before, you know, 82.71 here, 82.69. So if I would have made the trend line from back here, probably 182.75, I never would have gotten triggered. I never would have bought here, and I would have avoided this drop. Okay, 182.24. 182.24. Let's say I would have taken it at 182.35. Boom, I'm in right here, right? 182.35. The next day, I'm out at 181.89. I lost a point. That's it. I lost a point on this failed breakout. And this one right here, I would have taken it at 176. 176 to 182. I probably would have gotten out at 181 something when it reversed back out again. So again, not all breakouts work, but the beauty of this is if they don't work, your losses are so minimal. I mean, 2-3%. I mean, 5% is like huge. I mean, you're not holding for 10% and 15% losses. You're looking at 3, 4, 5% losses if it doesn't work, and you keep on trying. You can have 1, 2, 3, 4, 5, 6, 6, 7, 8, 3% losses. But if you have 4, 5, 6 of like 15, 20% gains, you're going to be very wealthy in the long term. Okay, very simple. Look at this. Look at this little base right here in the 153, 154 range. 154 to 161. And then this little nice little pullback here. You probably would have gotten in right here, taking it this high. Then you would have gotten out. Nice little shit. You get in right here. This one worked tremendously well. This one right here, you would have taken it at 184. 184, let's say you would have gotten out in this day right here. Okay, so you took it at 184, you got out at 188 around there. That's a 4-point move in like a couple weeks. And then you wait for the shelf to break again, and you would have gone in right here. Let's say at 195. 195, and you probably would have gotten out somewhere around here. When this kind of came back, you would have made a point or two. And then you wait for the next one, and so forth. Now we're doing the same thing. So you have little, you might get whipped around when it's not working, but it's still going from lower left to upper right. Okay, that's what you're looking for. Lower left, upper right. Look at this. This in no way has this chart ever done this. Okay, lower left to upper right. That's what we're looking for. Okay. Now I want to show you as far as little mini lessons. This one, EOG. What I was saying before about when the stock is near 100, where if it breaks 100, it normally goes to like 112, 115 around there, and then you retrace back. This is a perfect example here. EOG, when it hit 98, it never got to 100, right? So I had this little line right here, and then that's kind of where you would have taken it, or even if you were taking it here at 94 something, you would have taken this puppy all the way up to like 102 around there. And then see how it kind of broke 100, it came back inside 100, and then once you broke 100 again, you got to like 115, 112 right here, and then it's coming back. So like it kind of works that way. This is a nice little shelf right here. Once you broke the 88 range, you went from 88 to 98. You never got to 100, right? But then you would have probably gotten out. I probably would have gotten out. I would have probably held the 21 here, but I probably would have gotten out like here again once it kind of came back inside. But you would have taken profits along the way. You probably would have taken 25% profit here on this day, and so forth. So it's a nice little lesson on what I was saying about once the stock is near 100, it normally once it does break 100, it goes to like the 112, 115 range, and then it pulls back again, and then you can get in again at the 100 range, and if it breaks inside 100, that's a nice little tight low risk entry. Okay, EOG, LXU, another one I wanted to kind of go over, where you have like nice little kind of shelves built here, and then this little nice little trend line here. You would have broken once it breaks here, you get in here. This is what, 11. You want to take it 11 to like almost 16. Now again, a stock like this you don't want to chase. You do not want to buy now. It's not a time to buy because it's extended. Look how far it is from even the 9 EMA. Okay, you want to buy them when it's tight action and the initial breakout, like right here. Look at all these small little bars, and then once it breaks, you would have gotten in right here. Let's say at 9. You were taking in 9 to like almost 11. 2-point move on a $10 stock. That's 20% return. Okay, here. Nice little shelf right here. I mean, they're all over the place. You just have to be patient and look for them. Okay, you would have taken a 720 to 10. Okay. Another one I want to go over. GLNG. Again. See how you never want to buy up here extended, but that's nice little shelf here. What I've been looking at, this little shelf here. Once it breaks here, this little shelf at let's say $15 or even $15.50. You would have taken it at $15.50. You're up at 17. I mean, I definitely would have taken profits around here, around 16.5, around there. but I will still have a position. Again, I'm not taking this. I didn't take this trade, but I want to show you how when they work, they work. Okay, even here. Well, look at this one. Very perfect real life lesson. 1402, right? You took it here at 1405, and what happens the next day? It broke this back, let's say, to like 13. This is what, 1378? That's 1388 right here. So 1378. So you bought it at 1405 and you got stopped out at 1378. That's, I mean, what, 2%, loss, 3% loss? That's nothing. So your losses are very, very, very minimal compared to the potential gains when you trade correctly. And you trade a nice system that works, which is what I'm trying to teach you guys. LNG, same concept. Look at this, nice little shelf right here, right? This is what we're looking at, nice little shelves. You broke this shelf right here at 121. It's at 129, guys. Again, I probably wouldn't have held it. Once it did this to like 140, I'm pretty sure at 130, somewhere around here, I would have gotten at least 50% out. So I would have secured some profits to not let this come back to me. But let's say I would have bought 100 shares, I'm out 50% right here. I'm still holding 50%. If let's say on Monday it breaks this low right here, I get out another 25%, and then let the other 25% rise. So you take profits along the way, and you never let a winner turn into a loser. Okay? Even back here when it's at 90. Okay? That's the concept I told you about. Once it breaks 100, it kind of takes off. Right here, kind of came back a little bit in a 105, 110 range. It kind of came back a little bit. It never reached the 21. It never got there, and then it took off again to 113. Okay. And the last one I want to kind of go over as far as a lesson, Alcoa. Again, this is what we do, right? This is what we do. We're looking at this little shelf right here. So around these days right here, I'm looking at this little shelf right here, $65, $64.50. You get in right here, and you're at 77. It's a 12-point move. That's a 12-point move from February 10th to 2 weeks. In 2 weeks, you would have had a 14-point move on this stock. That's good money. That's good money. Okay? So that's what we look for. This little shelf right here, 57, 58. Okay? You would have probably taken it to 64, 63 around there. Here, 44, 45. You probably would have gotten stopped out right here. So you would have lost, 50 cents, 70 cents. And then once it broke again above 45.80, you would have taken it 45.80 to like somewhere around here, probably to like 50. So that's another 5-point move. So again, they're not all going to be 16, 20, 35% returns, but your losses are going to be 2, 3, 4%, and your winners are going to be 7, 8, 9, 10, 15, 20% returns. That's the point I'm trying to make here. Even back here, 26.20, right? So let's say you would have gone in right here at 26.30, 26.30. Worst case scenario, you get off right here when it gaps down at 27.11. You still made money. Even you made a point, So that's kind of what I'm trying to drive. I'm trying to drive the point across that trading is very simple. Look for clean, simple basis. Clean, simple basis. And once that breaks, you get in. If it comes back inside that base breakout, you get out. And you have a very minimal loss. And if it works, you go for the ride. Okay? And then you take profits along the way. You take 25% profit here or 20% profit, and then once it breaks, some kind of like support level, I probably would have gotten another 20% out here. So at this point right here, I probably only have like 20% left of my initial shares here, whether it be 100, 200, 300, whatever, it's 20%. So you take partial profits, and then once it comes back inside, you're guaranteed a winner. Okay? So have discipline, trade smart, don't trade emotionally, Don't try to chase every shiny object. Don't fall in love with a company name, whether you know the name, whether it's Apple, Tesla, Nvidia, PayPal, whatever the company is irrelevant. Price action. Price action. If it's trending higher, it's a good stock. If it's trending sideways or down, it's not a good stock. And if it's trending sideways, perfect. You want to see a nice little consolidation, you put your alert and you get in right here and you write it. And if it does this and it comes back inside, you get out. Minimal loss. You manage risk. Okay? This is probably a little longer than I expected, but I really want to get the point across. And over the weekend, you get it in your heads. Don't chase stocks. Don't try to bottom fish. Don't try to buy stocks that are cheap. Do not buy stocks that are going down in price. Only buy stocks that are going up in price. You want to buy high and you want to sell higher. You do not want to buy low and sell high because you don't know how low is low. You're never going to time a bottom and you're never going to time a top. So you sell along the way on profits and you let the rest ride until you come back into a breakdown of the stock, breaking a moving average or breaking a previous support. It's just that simple. Okay, trading is very simple. I really, really hope this helps, guys. Have a good weekend. If you have any questions or further clarifications on anything, please ask me. I'm here to help and support you guys in becoming a much better profitable traders. Thank you.